Grand Rising. Sincere apologies for the delays this morning. You know, I always try and be on time, but for those of you who don't know, I done my backing in the gym, and I had physio this morning, and it just ran on a little bit. So I do apologize. I've come straight from the gym, ran straight into the office because I want to get busy with this education. I know there's a few people on that must have saw me not on and thought to myself, oh, I'm not on, but we're on. So I'm going to try and get straight into it. Now, yesterday, we had a look at, there's a few things, and Darren, or was it? Or somebody told me that they wanted to look at gold yesterday.
Yeah.
And we looked at, was it yourself there? Good morning, bro. Let me turn this down.
Good morning, man.
Good morning. And we looked at gold, okay? Now let's have a look at gold's situation from yesterday, and I'm going to explain to you what I believe gold's doing, all right? So gold's doing exactly what we thought it was going to go and do, but it's just doing it in phases to take the mic. Now, what do I mean by that? I mean that we spoke yesterday. Let's rewind. And let's get to Breakfast Club yesterday. So Breakfast Club yesterday was, look at the time, Monday 29th at around about this time here. Okay. And, you know, I said yesterday, because this is my little squiggle from yesterday, all right, that I believe that this market more than likely is going to push up. Okay. It's going to push up and capture liquidity above some of these highs. Even if it wants to come down. Even if it wants to come down, the market's going to push up first. Have a look. We're going to hit play real quick. And we saw this market push up above these highs, okay? And had a lovely reaction. Now, on a smaller time frame, and I'm going to show you the entry on a smaller time frame. Now, I'm going to say to you guys, I don't necessarily believe that you guys should be on the 1 minute time frame, but I'd like to show you the entry so you understand how the strategy that I teach is fractal. It's across any time frame. Why is it across any time frame? Because it's like the building blocks of life when it comes to trading. Yeah, it's market structure, it's price action. Everything else is like, it's like, it's zhuzh. It's just, it's fluff. The cake. The cake is what, yeah, you get icing, you get a little, I don't know, the kids get little balls and you get a little, that's the icing. What I teach is the cake. It's market structure, it's price action, it's the building blocks of this trading thing, all right? Now, if we were sitting here, have a look from here, and we understand, I said yesterday that I think this market's gonna come up and capture some liquidity above these areas, all right? Now, the strategy is about seeing an indication of what the market's going to do, looking for a correction, looking for a continuation. Now, you can't necessarily see it on the 15 minutes time frame. On the 15-minute time frame, this is structure, this is structure. And we're going to go back into why this is structure. If I was to draw some lines in here, I have to touch this last low before this highest point, okay? On the 15-minute time frame, that is a break of structure. However, the issue is that this market is collecting the liquidity above these areas. It's doing it in batches, all right? So like I said, there was an entry here yesterday on a smaller time frame, which looks like this. Have a look. Drop my time frame down to a 5 minute. Like here on the 5 minute time frame, you can't necessarily see the structure once again. I can see it because I can see how the candles move. But to somebody who's looking at it, there's just green candles here. Let's drop our time frame all the way down to the 1 minute time frame, okay? On the 1 minute time frame, have a look. This, bearing in mind, this is just capture the liquidity that is sitting above these heights. All right, so we draw a proper little line in, and we understand what happens when the market captures liquidity. What does it like to do? What does it like to do? What kind of
run in the opposite direction? Run
in the opposite direction. I've drilled that into you guys so many times. All right, and as we can see here on a smaller time frame, I'm gonna make it a white dashed line. So you know what we're talking about. Nam. So after I ate that liquidity, in the back of my mind, I'm thinking, right, Jay always says, after we eat liquidity, it likes to run in the opposite direction. So if I was drawing my trend line has to be like this. Somebody tell me why my trend line has to be drawn like this. Maybe you can't see it, let me make it a bit bigger. Somebody tell me why my trend line has to be drawn like this. Let's go. Let's activate. Why did I draw my trend line like this? Why didn't I draw the trend line like this? Why didn't I draw it like this over here? You know, underneath this little bit over here. Why did I draw my trend line like this?
Because that's the range the market is trading in between.
Yes, but not what I'm fishing for. I'm not what I'm fishing for. Why? There's something that I have to do that I've been drumming into you guys' head for a little while.
Last
when
swing
I'm
low before the high.
exactly, right, well done, Dal. I have to touch this low here before. This is the highest point. Do you understand? This is the highest point the market went to. So I have to make sure when I'm drawing my lines, I'm taking into consideration some data points, data points, data points, data points. I must make sure I'm touching that last low before the highest point. That is giving me my structure. Because the market came up here, made this highest point, and then from there started saying, okay, I'm not too sure, let me do the hokey cokey. Yeah? Let me do the hokey cokey. And if you didn't believe that this was a closure below, which is quite tight. Yeah, it's quite tight, it's not a closure below that wick. But definitely over here this was a retracement. Doing what? Let's rewind this here. Oh. Going back, this push down below here was definitely a closure below this structure. Let me try and grab it. This was wicks below this structure. Okay, maybe not enough, fair enough. This was definitely a closure below this structure. Then what did it do? So 1 second. That's my car keys. That's, like when you go to mommy's house and she gave me some gadgets. She said, Jay, you're always losing your keys. So I bought you something that you're supposed to whistle and then you can hear the keys. The problem with this thing is that this rings for anything. It's constantly making noise. Yeah? So when I find my keys, it's not even working. All right, somewhere in here, my party. All right, anyway, yeah. So when it closed here, what we're expecting that the market may do after closing breaking structure, giving us the indication what we're expecting it may do. Let's go. Correction, let's go. And even on top of that, to give it some more source, when we see this big push down here, what concerns did we see opening up?
Imbalance.
Imbalance. And have a look at this market here. Came straight back up there to close that imbalance. Closed. For argument's sake, if you was here on a smaller time frame, which I'm not saying you cannot trade here. This is not what I'm saying to you guys. I just say that I don't think it's the best place to learn how to trade when on a 1 minute time frame. But look, here's your aggressive entry. After a break of structure closure, indication we want to go to, correction, closing the imbalance that doesn't break the previous structure, and then a correction closing down below. For all purposes, this is your aggressive entry. Your safer entry would obviously be above the swing high, but let's just go aggressive. And the market does some good work. It ran in the opposite direction. Now, the issue that I'm having is this. Let me show you what my issue is. If I zoom out, because we know about this here, which I'm going to always keep open for now, because I want you guys to really hold this image in your head. The image is of, you know what it is? It's our Russian doll. I might call it a Russian doll theory. I might just start coming up with my own zhuzh, yeah? So I call it zhuzh, just zhuzhing, man, using my own, making stuff up as I go along, making my words, all right? So let's just say, let's get this. Open this image in a new tab. This is the markets. Give me a bigger picture. Come on, give me a big picture. Give me some filters. All right, let's get a nice big picture of our Russian dolls. I kind of like the other picture. Oh, here it is. Let me use this one. Open this one in a new tab. And I want this image to always like, oh wow, don't worry about it. But to be in your mind. Yeah, this is the markets, all right? This is your higher time frame, whether that's going to be your daily and weekly, then you're going down 4 hour, 1 hour, 15 minutes, 5, 10. Like this is how the markets sit, all right? So have a look. Going back to our gold trade. Yes, we're looking here. We saw this liquidity grab, which is above this dashed white line, but have a look when I zoom out. I'm on my hour. I'm concerned about, what about the liquidity above here? Here. Now the market overall, have a look. is in a bearish impulse. And I said that even if this market wants to, remember, it's trading within this bigger range, but even if this market wants to go down, because right now we're at the top of this little yellow trend line, okay, that I said it might want to capture the liquidity first before running down. Now it's captured some liquidity, but we may, say for sure, because remember, this is trading within a sideways action at the moment. And the overall market is bullish. If I zoom out to my daily time frame, have a look, the overall market is making ever so slightly higher highs and higher lows and some higher highs. The market is bullish, but we understand that the market moves in waves. So even though it may be bullish now, there may be a huge, this is bearish, even though it's bullish overall, this is bullish, but then this is bearish, even though it's a bullish overall market. So this is bullish, then it may be a bearish a possibility. And we have to trade what we see, all right? So I'm saying to you that, yes, at the moment, the market is trading kind of within this range, which is what we discussed yesterday. Hit the tape if you didn't see yesterday's session, all right? Should be up. I don't think I labeled it really well at the moment. I need to go and do that. But I'm saying to you, I'm still a bit concerned that even if this market wants to push down further into these levels, gold is stubborn, is excited. It might still do this first and then go. Yeah, it might still come and capture the liquidity that is sitting above those areas. Like, I am still a little bit concerned that that's what the market may do. Okay. Okay. So I'm still a bit concerned about that. So look at it when I zoom in. Have a look. Yes, we did capture that little bit of liquidity above this level here, and yeah, we ran in the opposite direction. We did. And so for me right now, how I'm looking at it is I'm expecting now a correction and then a continuation. But if I don't get that correction, if I don't get that continuation, have a look at this market. Fell to hell. Absolutely beautiful trade. Yeah. On a smaller time frame. Yeah, which I don't necessarily want you guys in. Don't worry about it. You'd be looking at it like this on a 5-minute time frame, saying, here's structure now. It's just broken 5-minute structure. That's fine. So what you're waiting for afterwards is a correction and a potential continuation. If you start seeing a continuation on a smaller time frame, then maybe you could decide to get in. All right, but have a look. The market started to correct. And we got right back up into, let's see when it stops moving anytime soon. Anytime in a minute, maybe. Oof. Oof. So the market came all the way back into this area here. And what did I say to you? My concern was, I'm not expecting this market to start pushing up all the way and getting past this level. I'm not. Even when it came up to here, watch, even when that market came all the way, because look at structure. There is no structure in here. This is, it fell out of space. So we're expecting to see it maybe come back up here and check the battlefield and see what's going on. And it came up here, checked it, but on a 5-minute time frame, didn't come and break any structure from this push here. Look what I'm saying. The market came up here and was just came back and it was trading within here. It didn't come back and break this structure and start coming down. So for me personally, it's exactly what I said. There is liquidity still sitting above those 2 yellow lines, those heights. Now, at the moment, where are we? We've captured that liquidity. Nam, nam, nam. I don't know, maybe it wants to be a bit more aggressive and even push deeper into there. I don't know. But what I'm going to do is the first thing I know about the markets. What do I know about the markets, guys? What's the first thing I know about these markets? Somebody tell me what I know.
Neither. Nothing.
I don't know what they're going to do. That's what I know. I know that these markets, I don't know what these markets are going to go and do. That's what I know. So what I can do is I can have my biases. I can say that this market is trading down within this range here. Can you see this little yellow angle? I could make it thicker because it's a bigger angle. All right. But this little, even if it wants to come down, I made it quite clear that I believe that the markets may want to nam. Look, you can see here, this little push here is taking liquidity. Before, it just took liquidity above this high. By this little push here. This was Monday. Have a look. Monday Breakfast Club. Nam took liquidity, ran a little bit, and he said, you know what? I swear Trevor owes me money as well. This is Trevor over here. Here, T. This is Trevor. And in fact, this is Jason. And this is Tam. Yeah. And this is Shakir over here. All owe me money. All right. So here was Jason. I came and got my money off Jason. I was like, mate, nam. You owe me money. I came back and I collected that liquidity. Jason's gone. And then I started to go about my business. You know, I thought, you know what? Yeah, collected that money. And I started going in. And once I was on the drive to where I needed to go, I was like, I swear Tamara owes me money as well, you know? And whilst I'm down there, I think Tamara owes me money. You know, I think Shakir owes me money. Someone else owes me money. So basically, I thought, you know what? Before I go about my business, which we're saying at the moment, maybe in this direction, maybe, because we don't know. The market came and nam, ate that liquidity. Now that little wick up there has taken that liquidity. Now I'm not sure whether the market's done. Maybe I want to make an example of Shakir and be like, listen, don't ever have you owing me money again. And I want to push a bit deeper up in here. I don't know. But what I do know is that little wick up has taken that liquidity, and therefore we may see a run in the opposite direction. Now, how do I define when we're going to start to run? Well, let me draw in some lines. So I want to draw in some lines looking like this first and foremost. Okay, it's a general kind of angle that the market's been pushing up. But as this is getting the price action is happening quite quickly, I have to show that acceleration. Look how price accelerated. It left this blue line and it accelerated like so. Now I have to put this line here. Why do I have to put this line here? Say it to yourself, because this is the last low before this highest point. Okay, I have to put my line in there. And at the moment, in my opinion, this market is kind of going sideways. At the moment, yeah, it's kind of going sideways. And unless I drop my time frame down to a smaller time frame, structure on a 5 minute is here. I'm just letting you know. Unless I drop down to a smaller time frame, which I'm going to do just for this example, just so we can see, the market's going sideways up here, and it's not going to break structure until I see this happen, and this happen. And I prefer to get in a trade when this happens for a few reasons. Can anybody, for the $1 million and for the holiday in the Caribbean and the fluffy toy, yeah, who can tell me why I'd prefer to see this structure here broken here to convince me that this market's actually going to get bearish, opposed to maybe, even if I drop my time frame, I see some structure in here, opposed to me seeing it, I don't know, here. Does anybody know? And I'm going to give you some clues. Go on.
Is it because it's broken some major structure and we trade to structure, so that's an indication that it's going to the next point?
Yeah, I'm gonna give you 50%, 60% on that answer. But there's something else as well.
Is it because of the imbalance that's below it?
No, but yeah, if you're saying there's imbalance here, there is imbalance here, maybe a tiny bit in here. Yeah, but it wasn't what I was looking for. I'm gonna give you extra 5%, maybe we're up to 70. Give me that last 30% chunk, and I'm gonna give you a clue. The clue is that's the clue. Anybody? Someone's like, oh God, I can't get it. It's for the $1 million and a trip to Jamaica and a fluffy toy. I mean, you better start firing something. Yeah?
It's broken outside of the range.
It's also broken outside of the trend. Yes, outside of the range. See, my point I'm making to you is this. Have a look. I don't know what these markets, well done, Jason. I don't know what these markets are doing. So when I put in this bottom blue line, this was the range that the market's trading within. Can we all see that with our eyeballs? Let me try and delete some of the other distractions. All right, let me delete that and get rid of all of these distractions. What else can I delete? Delete this. Delete all these little distractions. All right, can we see? Does everyone agree that this market looks like it's trading within this little blue range? Yes, we agree, Jay. Blah, blah. I'm not even asking. All right, so like you can see this market is trading within this range. So therefore, if this market breaks outside of here, for some reason there's some smaller structure in here, if I drop to my 1 minute time frame, right? Yes, it could break, but I haven't got the answer of whether or not this market is broken outside of that blue range yet. You understand? And even if I get into a good trade and it starts to go in my direction, it might just go boing. Yep, that's what we wanted to do and trade back into that blue range. Because that's what it's been doing. Have a look. Sometimes I'm making this up. This isn't my opinion. This is a fact. the market's been going like this. That is a fact. That's not my opinion. So why now, just because I'm looking at it now, should this market stop doing this? Why should it stop doing this? Well, yes, we can say that it's grabbed the liquidity. We can say it's supposed to be trading within this bigger yellow angle coming down here, which is just a line. So I can move this, as you see, it's not very accurate. It's just a line, it's a ring, it's an area that the market's been trading. What do I mean? Let me zoom out. This yellow, bigger angle of the market trading down within here. Yeah. So that's another reason why I'm thinking to myself, yeah, it may turn around now, etc. But within this little blue impulse, I'd feel a lot more comfortable if the market not only broke structure, like I think Jason mentioned. Where's the structure? Well, here's the bigger 15-minute and 5-minute structure. Yeah, let me see in a 1 hour. Yeah, so it's 15-minute and 5-minute structure is sitting here. Yeah, so I'd like to see this happen. It break that structure indication, it correct, okay, and it continue. But also, if it does that outside of the trend, it means that it's getting a bit, it's getting a little oh, God. I can hear myself, but I can't feel myself. I want to feel myself like turn it off. All right, so it means that everyone was wearing baggy jeans, baggy jeans, baggy jeans, baggy jeans, baggy jeans, and it's not only broken structure, it started to wear straight jeans down here. It's doing something else. Do you understand? So even though, have a look at this on a smaller time frame, I'm going to try and see if I can see structure on a smaller time frame. So I said that this is kind of going sideways here, and this might not be clear on the 5-minute time frame, but when we zoom in, I'm going to get rid of this because this is just showing the liquidity. I'm going to get rid of this. This is showing the liquidity. Just understand the liquidity has been taken by this wick. But look at it on a 1-minute time frame. How that's, look at that. It looks really sideways now, isn't it? Just a minute ago, it was like, is it going sideways, Jay? What? Is this sideways action? When I drop my time frame down, it's really going sideways. I zoomed in. It is really going sideways. Yeah, and even here, the structure's not great. But if you turn around and said, there's a little bit of structure in here. Last little kind of down move before here. So close to this bottom bit anyway, you might as well wait, in my opinion, okay? So right now, this market is going to do something. It's going to decide to either do this, grab the liquidity and then start coming here. It's either going to grab the liquidity and decide it wants to continue going up for some reason, or it's going to do this, break structure, make a retracement, come down here. But I am more interested in when it breaks this level here. So what am I going to do? I'm going to pop 2 alerts in. I'm going to pop one just below this consolidation level. All right. Crossing down. And I'm going to pop one above this consolidation level here. Crossing up. Okay. And I'm also going to pop one where I'm actually concerned about, interested in getting in this trade, which is when it breaks outside of the range and breaks this structure here, crossing down. Okay. I'll put one up here as well, just for measure, just in case it's doing something crazy. All right. Now, this is how we trade, guys. It's nice to think, let me show you this. It's nice to think that every time we sit down at the markets, right now, today, as everyone's here, we can hit a trade together. But if the trade's not ready, you can't do that. You can't get on the bus if it's not there. How can you get on the bus if it's not there? Go wait. Go wait for the bus. And then when the bus comes, you got to wait till it slows down. You wait till it opens the doors, and then you got to step on the bus. You can't just say, I'm getting on the bus now and just step into an imaginary bus. And a lot of times, I'm telling you, traders, because of their impatience and because they believe that because they've opened up the charts and they think to themselves, oh my God, there's so much money here. It's money. If I just hit the button and it accidentally goes up, I'm going to make money. This is the mindset of especially a newbie trader. They think to themselves, I can make £1 million out of the market. You can make £1 million out of this market right now. Because let me tell you something right now for free. Even if you're £1,000 account, you could put on a trade that you over leveraged on and you risked £100, which is 10%, which is, we don't risk 10%, we risk 1%. But let's imagine you went berserk and you put, £100 trade on and something happened in the world. I don't know, some breaking news came out that President Biden is an alien and something else is going to happen. It just came out of the news and that market tanked and you was in there for the sell. That £100 could turn into 100 grand. Could do. It's possible. It's not impossible. It's unlikely. It's extremely unlikely. And let me explain to you what this trading thing is. It's about probability. What is the probability that when the market structure breaks a major structure where there was previous demand? Listen to what I'm saying to you. There was previous demand. And let me make this simple in your brain. Think about a shop. think about your favorite jacket. Look at my little gilet that I wore to the gym. Let's imagine that there was huge demand previously for this jacket at £100. Okay. So therefore, when the price came down to £100 and you went to Nike, they were gone. There was none on the rack. There was just one extra small that somebody didn't get. Okay. And then let's imagine that you get back to that shop 3 weeks later and the price is, £100 and there's loads of them still sitting on the shelf. You can make the assumption that that previous demand is no longer there. So therefore, next time you come to Nike, it's possible you see it on sale for 80 quid. It's the same principle in these markets. So what is the probability that after I go to the shop and I see loads of them there now at £100, loads, it's full up, there's every single size under the sun. What is the probability that in the sales or in the end of the year or January sales, or every single day they have in the next sale, what is the probability that that item is going to go into the sale? Very high probability. Because they're Nike and they're trying to sell jackets and they've got a full rack of stock that isn't moving at 100 quid. But that other jacket, the new one, made out of leather, that is flying off the shelves. Every time they come in, they say, bro, they're gone. They've gone, everyone came and got them. Is that going to go in the sale? Are they going to drop the price of that item and put in the sale? No, why would they? If anything, you're going to see it disappear for a little while. They're going to add a different color zip to it, and it's going to be more expensive. It's the new one, the new season. If anything, it's the same principle in these markets. It's about probability. If this market trades within here, boom, 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 and it can't break this level, and then you see it start going in the opposite direction, indicating, correcting, and continuing. The probability of this market continuing to go in that direction is, it's higher based upon these confluences that we have, these breaks of structure, these other things that we learn on a daily basis. So right now, like I said to you, I'm looking at this market and I'm thinking to myself, it's consolidating. We've come up to this level, we've captured liquidity. It may decide to run in the opposite direction. So that's my first little confluence in the back of my head. We are at the top of that yellow range. That's the second little bit in the top of my head. Like I feel there's a higher probability this market might turn around. However, I know it's overall bullish. I do know the market's overall bullish. So I'm playing with these things in my head. But I also know I'm a day trader and I'm trying to get in and out the market and take my money. I'm not trying to predict the future like my name is, I don't know, like I'm a wizard. I don't need to predict the future. Like the market's going to be going up for the next 3 months to this. Who cares? I don't care. I want to know what I'm going to do right now, today, that could make me some money. So I'm going to be looking at this market saying to myself, yes, I do have these opinions of what the market may do. But even if I get in here and this market does this, all right, and I get in, let's imagine I did. I'm not going to because I can't see some good structure over here. But let's imagine there was good structure in here. If I got into this trade here, have a look. Entry, my stop in here, and I started getting into profits. I am going to be trying to take my profits or protect my profits by the time I get to this level over here. Because I've already said my bigger concern is this market going to boing, bounce off here and do something? And the joke is it might do both. It might boing and bounce off here, all the way back up into here, bring me back down to zero, and then do that. Might do. But the question is, if I come down here into good profits all the way down here, oh, why am I moving so slow? All the way down here, why should I take me back to zero? If I'm in this trade here and I get into this trade, have a look, and I get down here at a 1 to 4, why should I let this trade take me back to a 1 to 0, only for it to get back to a 1 to 4? I don't need to, because I understand that one thing I know about the market is I don't know what it's going to go and do. So if the market gives me 400 quid or 500 quid on the table, see what I'm going to do? I'm putting it in my pocket. Thank you very much. I'm not leaving it on there and every 5 minutes someone takes 50 quid. 5 minutes someone takes 50 quid. 5 minutes someone takes 50 quid. Why would I, on the basis that I somehow know that they're going to turn around and give me back my 500? I don't know. And I'm telling you, a lot of people that hold trades too long and have this problem taking profits is because in their brain, they think they know. And let me tell you what happens. This is what happens. They get in this trade and it goes down and they're risking $100 and it got down here to $400. Yeah, maybe even push down here and gave you $450. And they're like, whoa. Then it started to kick back. And you know what happens? The little gremlin in your brain says, yeah, it's going to turn around. It's going to turn around. It's going to turn around because somehow you know it's going to turn around. And you know what it does? Does that. So now you've gone from hero to zero. You as a hero that risked $100 here, you got up to $450, which let me tell you something. Or in any walk of life, like there's a lot of people that don't go to work for 12 hours out of the day and make that money. No disrespect to anybody. All right. But somehow in your brain, even when you saw it kicking back against you, use that it's going to turn around. Because you know what it is? There's a little weird part of your brain in your psychology that you can remember being up 450. So your brain can't close that trade out at 300 because somehow you feel like the market owes you 450. But what you don't know is the market don't care about you. You're nobody. Market don't owe you nothing. Market's going to do whatever it wants to do. And the joke is, after it stops you out here, you know what it's going to do? Just Sod's law. It's going to stop you out here, then it's going to do that. Yeah? So the point I'm making to you is this. What is my point, Jay? My point is that first and foremost, understand that this is a probability game. So the same way when this comes down to here, my concern is, are we going to tap this and start going up? So I should protect myself. Let me take some profit. Let me at least move my stop loss to 250. If it does kick back and stop me out for 250, well, I gave you 100, I put 100 quid worth of risk out. I got 2.5 times back. I'm still a winner. I'm still on the podium. Whereas you was at 450, decided to hold it, you got stopped out for zero, you didn't even get flowers, you got no certificate, you're not even on the podium. I am on the podium. Yes, I could have taken 450, yes. But the aim of this game is about making money. So if how much did you make today? I didn't make 450, I only made 250. Oh, that's good. Yeah, it's good, I guess. Yeah, if I had a bigger account, it'd been 2.5 grand. If I had a bigger account with another zero, it would have been, 25 grand. Yeah, I suppose it is good. All right. So in this gold scenario, that is what I'm waiting for. I'm waiting for really a break of this structure to convince me that it's grabbed the liquidity now, and maybe gold may start a bit of a bearish run. And at that point in time, even though I'll be monitoring how much profits I make, and I would be identifying these targets, what are going to be my targets, guys? Going to be structure. And you can make a decision based upon how your entry is, because remember, any trade you get in, and this is what's very important. When you get in a trade, where you place this stop should dictate what your goals are. So if I place this stop here, I want to get in a trade for at least a 1 to 2, 1 to 3. Like there has to be at least this in the trade. If I'm placing my stop all the way up here. If I get into my stop and my stops like this, wow, I got in there for 3 pips. I don't need to be sitting there for a 1 to 12 trade. Yes, it's great if it does do that, but I've got to be thinking to myself, this smaller, where I place this, i.e. above a smaller high, I've got to respect the other smaller highs. Because if this trade gets to another one of these smaller highs and it gives it a slap, it might come back and break my smaller high and then continue to go in this direction. If I go to a medium high, which just sounds strange, but I'll explain in a minute, then I've got to take into consideration the medium highs. I've got to say, okay, the smaller highs, even if this turns around, the smaller high is not going to slap it back and make it break a medium high. All right, which sounds mad, but I'm going to explain it in a minute. All right. And therefore, that will be my target. Okay. And if you know how to manage your trade, you can add to your position, or you can manage your targets in your mind. So personally, if I go into this trade right here and I'm placing my stop, see the good thing about this is all the liquidity is being grabbed from above here. And if I was to get in this trade here and I placed my stop above the swing high, for argument's sake, so look, I'm scooting all the way back down, and this market, and I get into this trade and I place my stop above this swing high, which is that wick high over here. Let's imagine that. Okay. I want to at least be able to say that I'm going to be taking this trade down to some sort of structure like this to at least get to my 1 to 2. Okay. However, within this energy, there is smaller 5-minute structure that we can see here. This is 5-minute structure, and it's 15-minute structure, and afterwards maybe we would say 15-minute structure was like these lines are all kind of structure that's coming up on a 15-minute time frame. But you're not going to get, I'm saying, look, guys, it's no point in getting in a trade risking 1 to make half. That makes you stupid. Do you understand what I'm saying? Like, you wouldn't risk 1 to get back less than you risked. Yeah, it's not. It doesn't make sense. It's not a good way to. Don't get twisted. You could be a profitable trader doing that, but then again, it's very difficult because when you take a loss, you're gonna eat up all of your wins that you made over the last how many days. So you want to be getting in trades where you can at least get in trades for a 1 to 2, 1 to 3 trade. You do. So that alone is giving you some parameters for your targets. Because if Alan gets in this trade with his stop above here, and he thinks to himself, I don't really know where I should be aiming for. But if he's done everything else correct in regards to trading in the direction of the overall trend, waiting for a break of structure, it's corrected, it's continued, and he's thinking to himself, well, and then he thinks to himself, I want to get in for at least a 1 to 2. Well, that should dictate him getting out of that 15-minute time frame and being able to look for some larger structure. So let me show you. For example, this guy becomes a first little target for Alan down here. All right, why? It's 1 hour structure. Then he goes, this is another target, and this is another target. In between these targets, there's loads of different 1-minute structures and 5-minute structures and 15-minute structures. But Alan's got to have the patience to say that I got into this trade like this. I'm going to sit in this trade and let it break through little 1-minute and 5-minute structures against me. I don't really care because I've got a big enough stop above, our high, our structure over here. All right. Big enough stop above these kind of structures here or above all these highs. And I'm aiming for that. And he's going to sit in that trade and the trade's going to do this. TP1. TP2. Remember, every time you see it break this structure, this is liquidity. So what happens? What happens when it breaks this structure, guys? What happens when it breaks this structure? Bear in mind, I'm saying there's liquidity here, there's liquidity here. What happens? What happens every time it breaks this structure? Look at even the way I've drawn the lines. What happens? What happens when it grabs liquidity? We know, we definitely know, because we've said it earlier today. Whenever the market grabs liquidity, that's when you're going to see that kickback, that run in the opposite direction. But if you have a big enough target, you will understand that you won't be panicking at this kickback. You're going to panic if that kickback breaks this structure. This little, look, it grabs this liquidity, below this little level here. Then we see this run back in the opposite direction. I'm not panicking unless it breaks its structure. I'm sitting in this trade saying, yeah, I know it's coming back. It was 1,000, now it's 600, I know. But then afterwards, you see it doing this. And when it captures liquidity again, we see it. We see it. That's how the markets move. So that gives you some sort of comfort, because a lot of people don't know. They panic when they're in the trade. They're like, oh my gosh, it's coming back against me. What should I do? Yeah. So I'm saying, or alternatively, guys, let me say something to you alternatively, just to throw a spanner in the works. If you're in this trade, you get in, all right? Let me get rid of this. You get into this trade and it does great things. When I say great things is you got in up here and for whatever reason, when you got into this trade, it just did this. You ready? You got in when there was some breaker structure, wherever it was here, and you just went, there was some mad news came out and it started doing that. And there was this huge imbalance in here that at some point the market's going to come and take that. What I would do is I wouldn't be saying, yeah, I'm waiting for it to break against me, our structure, all the way back up here somewhere. I'd be dropping my time frame down and saying, as soon as this market breaks against me on a smaller time frame, so as soon as it does this, then does this, and does this, I'm going to get out. I don't care. I don't want to give back my £4,000 I've just made just to say that I've got the right direction. Because look, you're in here, you're up $4,000, and then it comes and it retraces all the way back here, closing the imbalance, takes you all the way back down to zero, and then maybe over the next few days, it starts coming down here. Or someone might say, oh, that's clever because you stayed in it for your target. And you said, but someone might say that's stupid because you was up 4K here and you went back to zero. If you was clever, you could have taken your 4K here when it broke structure. And when it broke structure up here again, got in again and took another 3K, even though it only got back down to where you was. So now you've made 7K instead of sitting in here for days and days and days and days, watching your profits go from 4K to zero, only to go and close out at 6 grand down here. So the bottom line is I'm trying to say to you guys, understand that we don't know what the market is going to go and do. And every opportunity that's presented to you, you must take it. You must understand when you have won. Yeah? Winning isn't because the guy on Instagram said, yeah, look how I got a 1 to 25 trade and I turned a $50 into $5 billion and now I live on an island. That's fraff. Forget about him. That's nonsense. You want to be able to say that I can consistently take money out of the markets by using my edge. And your edge is that you understand how to trade. Your edge isn't that you are a fortune teller and you know what the market's going to go and do. Look at this. My FX book economic calendar. This is all news. These are all things that can affect your trade. Orange folder news and red folder news and things that don't land on the economic calendar can affect your trade. So if I said to you, all of these things can affect your trade, you're going to be like, I need to take my money. I'm up good money. Why don't I take the money? That's how you should be thinking. So all it's going to take is some mad news to come out. You're not a swing trade. You haven't got a 800 pip stop loss over a major monthly swing high. And you're like, yeah, I can afford to just leave this and go about my business. You're a day trader. You want to get money every day. Every day. All right? Okay, let me get out of this market real quick. All right? And let's go look at something else. Is there a particular pair anyone wants me to trade or should go look at, or should I just go on randomly? Let's go back and look at the GU real quick. Whichever market you want me to look at afterwards, hold it in your thoughts. We'll look at it quickly. Yesterday we spoke. Have a look. It was Monday. Look at the date. We was here. We put a vertical line. This is Monday, and this was Breakfast Club about here. And what did I say? I said, yeah, we're in the middle of a range. We're in the middle of a range. The market's there like, yeah. I was like, nah, I don't really care about it. I don't really love it that much. I said, ultimately, I want to see it break outside of this yellow range, this yellow box. In here, I want to see it do something. And it hasn't done anything. It's done nothing. If you was in a trade yesterday in GU, you'd just been like, man, maybe you caught a little push down here because there was a little bit of sideways action in here that it brought, maybe. But then when it got down here to the bottom of that range, what did it do? Look, the bottom of this. Bear in mind that this is all drawn before the fact. This was drawn at Breakfast Club. We got down here, nam, ate some liquidity, made a correction, but we didn't continue, pushed back up. Right back up where we came from. Then we got back down to that middle ground here, which is a good sign. Didn't break this middle level here, all right? And it looks like maybe this market wants to continue coming bearish. That's my technical opinion. That maybe this market does want to start coming down here. However, it's just fraffing about in here. Have a look at the sideways action. Straight away, we can see that market pushed up, made a high. If I was to draw some lines in it, have a look how I must draw my line. You ready? Must be like this because I need to touch this last point here before this highest point over here. Maybe you can't see on the 15, it's dropped to the 5. This area here I need to touch. I'm also touching these levels here. And then we can see clear sideways. Do the hokey cokey. You would have been in the hokey cokey yesterday, just dancing around. Do the hokey cokey, then you turn around. This is what you'd be doing for the whole day. You'd be up, you'd be down, you'd be up, you'd be doing nothing. You'd be annoyed. That's what you'd be. And have a look though. Have a look. The strategy. The market comes down here. Even looks like it wants to go down here. It makes a correction, but the correction starts coming all the way back up in here. Yeah? Doesn't break this high. So this is still the correction of this bigger push. Let me show you something. This is a small indication. This is still a correction of that bigger push. And then there's a close down below. You could have got into the trade, but there is a smaller entry. Because this didn't straight away, this indication didn't pan out, and it started breaking structure. Because you see here, there is structure here that is being broken. There is structure being broken. Okay? Can't see it. Watch. My eye sees it. This is structure. If I drop to my 1 minute time frame. Ooh, look at that. That looks pretty perfect in regards to structure. That was broken against you. All right? But look at the other entry. If you said, okay, well, that wasn't the break. That was just some little false break, some little liquidity grab that you kind of grabbed here. But have a look at this one. This is definitely a close below these levels. Okay, I'll zoom in so you can see it, and then I'll drop to my 1 minute time frame so it's very, very clear. That's a close below those levels. That's a retracement back into these levels. If I go to a 10-minute time frame, for example, closing that retracement came and closed this imbalance. And then we can see how the market came, closed back down below. That would have been on a 5-minute time frame closure here. In, we'll just stop above here. But watch it on a 1 minute, which I don't want you guys in because you don't need to be, but I'm showing you because this strategy is fractal. I just showed you on a 15-minute time frame the entry. The 5-minute would have been here. Have a look on the 1 minute. Close below, clearly made a correction. That candle right here would have been my entry on a smaller time frame. I'm in, I'm here. Yeah, I'm not trying to say this is a 10 out of 10 trade. I'm just showing you the strategy works over and over and over again because it's like the building blocks. It's like the DNA of the market. Yeah. And even if I take in that larger entry with my stop above this high, because this was an indication on a bigger time frame, correction that didn't break the previous structure, and then a closure below. Here's the smaller entry. Have a look. The aggressive entry, exact same thing, bit more, but on a smaller time frame. And have a look. We went ham. Monies, the monies. But let me show you something. Watch. Okay. So if I was in this trade on a smaller time frame, and it just fell. Have a look from here. I got that entry, and I just went like zoop, like clockwork, zoop all the way down here to a 1 to 4. That's you gave me $1,000 and I've said, bro, keep your grand. Here's $4,000 on top. You'd be happy. All right. But someone doesn't know when to get out of this trade because they're just thinking to themselves, right, I'm already at $4,000. I'm telling you, this is how your brain works. When you start to trade, everything I'm saying, you're going to laugh. You're going to laugh to yourself like, yeah, this is me. You're going to be, I'm already at $4,000. What happens if it keeps going? It's going to get to $10,000 and $20,000 and $50,000 and $5 million. And then that's it. I walked into my boss, picked up the keyboard, smashed my boss in the face with the keyboard, and walked out of my job. You start thinking to yourself, yeah, that's what's going to happen in your trade. But Sod's law, that's not what's going to happen. Yeah. So if I'm in this trade for 1 to 4 on a 1 minute time frame, personally, unless I wanted to really get out, which you could drop your time frame down to a smaller time frame. Watch, this market came, broke structure, made a retracement. Because at this point, when it starts coming down here, trust me, guys, it could do this. It could have done that. Many of you have seen that happen before. So it's grabbed the liquidity now and decided it wants to keep going. It could have done that. So I'm not necessarily saying at that point in time, you just get out of the trade. I'm saying when you see that market correct and then continue with a closure above, take your money, mate. So maybe you didn't get your 1 to 4 and you only got your 1 to 3 or 1 to 2.5 here, but you still are on the podium. Because if you didn't do that, the market pushed all the way up into here, well, maybe you still would have been good. Yeah, the market pushed all the way back up into these areas and then continue back down to where you were, back to your 1 to 4. Yeah, but the point I'm making to you is this isn't a 10 out of 10 trade. This isn't a trade that necessarily I'm saying should be running in a direction. Why isn't that trade? So I said it's kind of like, yeah, kind of in the middle of this range. Yeah, kind of fraffing about in the middle of that range. So therefore, if I get some money and I get to a 1 to 4, just give me it. It's like you made the best of a bad situation. Give me my money, cool. I know that this wasn't the best situation, so I'm happy with my 1 to 2.5, 1 to 3. It wasn't a 10 out of 10 because other traders are going to tell you, you only take 10 out of 10 trades. It's impossible, especially when you're learning. You might only get a 10 out of 10 trade once every 3 weeks. So what, you're learning how to trade, but you only take 1 trade every 3 weeks. How your learning curve is going to be, it's going to be ridiculous. You have to be able to say, I'm learning. So I want to be able to read all of these candles, read what's going on, and understand what's a good trade from a bad trade. What's a 10 from a 7? Where should I be looking to get out? Where should I be waiting for a confirmation to get in? That's a better training, in my opinion, than me trying to say to you guys, you should only be taking 10 out of 10 trades. You should be. But they might not be 10 out of 10 trades, especially if you're only trading one pair. How often are you going to be at the top of the top of the top of a curve? Oh, but at the bottom of the bottom of the bottom. How often? I don't know. Once every month, 2 months, 3 weeks? I don't know. Yeah. So, there are, like I said to you, there are other things that can be done. If somebody here wants to say, like, I want to make money right now whilst I'm trading, you can do. You can do, but you need to understand that when that money's on the table, to take your money. All right? To take your money. All right? So I'm looking at this. Let me play it forward and see where we are with this GU. We're here. And in my opinion, based upon the fact that this market kind of broke outside of this little range here, retracement that didn't break 50% of the level, I'm thinking to myself that we are going to break this level. This is going to come down and break this level. That's what I feel. But personally, if I get here, even if there was an opportunity to get into this trade for the sell, which I don't think is a great opportunity, I'd really like to see this market break outside of this yellow range of larger consolidation. On the basis that on a higher time frame, have a look. Can you see this line here? This is our Russian doll theory. Our bigger Russian doll is created this barrier here. So therefore, me being able to say I'm getting in this trade for a great sell, and it starts to actually sell and break bigger structure, woo, the potential may be that this market is going to get down to the bottom end of this range. And therefore, that's when I'm in a trade and it's just rolling and it's going where it wants to go and it's breaking some major structure and it's going and it's going and I'm trading this. And somebody asked me for 1 week, what am I trading? I say GU for the sell. That's my another week. I say GU for the sell. That's my another week. I say GU for the sell. Because it's going in that direction and I'm just selling it. And yes, I can take partials and I can make sure I take my money looking at structure. So say, for example, you can see me here moving around and wriggling around my bigger structure. This is 4-hour structure here. This is 4-hour structure. And you could put all these lines on your screen if you wanted to. Or you could just be happy with your profits every single day and come back to fight another day on the basis that you're going to be looking for another sell entry. You can do. I would advise you taking your money opposed to, it's going to go all the way down here, so I'm just going to sit in it whilst I go from 0 to 1,000, back to 0 to 1,500, back to 300. Why? That's what I'm saying to you. Why, if you don't know what the markets are going to go and do? Yeah? You're not like a hedge fund with 100 million and you just set a trade on the basis of fundamental data, etc., and you're looking to check on it by the end of the month. You're not. You're a day trader trying to get a little guap every single day to grow your account. All right. And even when you've got big guap, you can take the same attitude. All right. So right now, like I said to you, I think we may break this. We are going to break this structure. How I feel, we're going to break this structure and then possibly start going and pushing down, capturing some liquidity here. So we might see a push here and a push back in this direction. And then have a look at this imbalance in here. The market might come down and say, yeah, we want to eat up this imbalance. So this is my prediction for it. Doesn't mean I'm in the trade. It means that this is me reading this book and coming up with my story of what I may see happen. Because if I can't read the book, then I don't know what's going on in the story. Someone give me a book in Japanese and ask me what happened. What was the main protagonist? I don't know. What do you think is going to happen in the next chapter? I don't know. Because I can't read the language. So first and foremost, it's about being able to read this language and coming up with a story based upon your own knowledge that you've acquired from this education that I've given you. Saying, okay, I can see this happening, blah, blah, blah. I can see this big imbalance. The market may want to come down here and capture this imbalance in here. And if it pushes past that imbalance and grabs the liquidity, we could possibly see a little retracement from below this liquidity, because there's lots of liquidity here. We could see a retracement here, which would be our correction. Then this might be our continuation. And maybe here I'll be looking for an entry. That's my story. And then where I'm going to take that entry, well, I understand there's a major low over here on a 4-hour. So I can see that liquidity being taken. And then possibly a retracement, because we know when liquidity is taken, the market is like to move back in here. But I'm going to hold. I'm going to leave my stop up here and I'm going to hold because I'm actually going for this target over here. That's your story that you're preparing in your brain. So when somebody asks you what go on, that's what's going on for you. And your story is the correct story for you. Because that guru or JP or some other guys are saying, no, well, I think it's going to go and do this and go up and go in the market like that. But he doesn't know because he's not a fortune teller. He can't see into the future. So that's just his opinion. And if he's not going to be there constantly with you, trading for you, you can't value his opinion over your own. You've got to develop your own opinion because you trade for yourself, by yourself, in your room, by yourself, in your office, by yourself. So it's about building up your own muscle. I could tell you all day long, guys, I'm looking to get into this trade here. Like, for example, the gold trade that I spoke to you about, when it captured the liquidity, it happened so quickly. But I could have said to you yesterday, let's have a look, we'll go back to yesterday. Here we was yesterday. I'm going to wipe this chart real quick, guys, all right? I could tell and say to you, this is Monday, boom. In the day, I could have said, yeah, like I said to you guys, I think this market's going to go and capture this liquidity before it does anything. And as soon as it did this, look how quickly that happened. Oh, so let me actually go to a different time frame. Go to a different time frame. It happened too quickly. Let's go to a different time frame so I can show you the difference of this, like, say, for example, signals, all right? So I said to you, and I put it out there in the morning that, yeah, when the market may capture liquidity before it runs in the opposite direction. It didn't capture all the liquidity, but I saw this spike here happening like this. And I put out a thing, oh, guys, it looks like we're breaking structure bullishly. We might be going for that liquidity. Boom. My alerts in my office start triggering. Okay. I'm looking at this thing here. By the time I put out a signal saying, yeah, liquidity has just been taken above here, somebody in here is waiting for a break of structure on a certain time frame. They'd never get that break of structure on that certain time frame. Okay? Because they're looking at it for 5 minutes, for argument's sake. Where's these tools? Where are they hiding? Oh, there you are. They're looking at it on a certain time frame. And I understand that because of the speed of that move, I've got to draw another line like this. Have a look. Someone else is looking at this line here. And they said, yeah, okay, I'm waiting for that structure to get into it over here. But I understand that speed of that move happened. I must draw another line like this. Have a look, watch. And as soon as it does that and it makes that high and I see the structure over here, I'm waiting for indication, correction, continuation here. Whereas Jason's waiting for it to break this structure here for him to hit the button. So therefore, I'm going to get into a trade, and by the time Jason's hitting the button to get in, I've already made a 1 to 5. And I'm putting up pictures in the group saying, yeah, look at it. Look at the time. If he's a raw. How has Jay done that when I haven't even got into this trade yet? Do you get what I'm saying? So the point I'm trying to make to you is that I can tell you to duck, and I can duck at the same time, and I don't get the jab, and you catch the jab. Because it's down to you to be able to understand your convictions. Have a look. Let's play it forward. Because this is happening quickly. This is the 1 minute time frame. Have a look. Oops. Even this here, remove this because I'm incorrect. It came and it pushed up higher. So I've got my little line in here. As soon as I see that structure break it, here's the structure now. Broke it, retraced, closed. There you go. I'm in. As I've already described. So Jason's out here thinking to himself, okay, yeah, Jason, whatever it may be, boom, 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 boom. Because I could have been in here. It's a bit tight, in my opinion, that break below this little wick. I'm pointing at the screen that you can see me. But yeah, all right. But I'm in here. And I might be aggressive. So I've placed my stop just above this high. Aggressive entry. All of a sudden, Jay and his Instagram and all these things he's putting up here. Oh, look, I just made this much profits from a quick 1 to 3 on this trade. And your future says, rah, bro, but we've only just broken this 5 minute structure. Now I'm sitting here and I'm waiting for what? After this break of structure, somebody tell me what I'm waiting for. Come on. Somebody tell me what I'm waiting for after a break of this structure. This is 5 minute structure.
Correction.
A correction. And also, what is there any kind of glaring issues that are glaring signals that are making me think to myself this market might correct? Is there anything that stands out to you? Look at all of these candles here. All of these candles up here. All of these candles up here. All these candles. Is there any candles up here that put in a little glaring issue of maybe why this market might correct?
Liquidity.
Yes, because the imbalance.
The imbalance. You've seen this huge imbalance open up in here. Okay. So maybe at that point in time, Jason's waiting for his correction in here to close this imbalance and to come back down here. But I have taken this trade 1 minute and I'm already up a 1 to 3. And on a smaller time frame, I'm going to show you something. Well, I don't necessarily need to, but I might drop my time frame all the way down to 15-second time frame. Or the 5-second time frame. If you haven't even got a certain subscription to trading, you can't even get the 5 seconds or 15 seconds. But on this basis, have a look. Here is 15-second structure. And I don't want to give away any more money. I'm happy that I'll caught a quick 1 to 3. All right, let's have a look, see what happens. Oh, even catch more. I'm catching more pips. Great. We're down here. All right, we haven't even started retracing and trying to close this imbalance yet. Oh, we're doing even more stuff. Have a look. I'm all the way down here. But understand, on this 15-second time frame, this is a 15-second high. Why? Because if I drew that line in, even though the market was coming down at this angle, it accelerated like this, and I have to touch that last high before this lowest point. And if I'm in good profits here, which I would have been at 1 to 4, loving it, over the moon, completely risk-free trade, I don't want to give anything back. So if I see an indication, correction, and continuation above this 15-second, I might just jump out. I don't even care if after that it sinks. I don't care. The money's in my pocket. I don't know that it was going to sink. I can only go by what it shows me. Let's have a look, see what happens. Oh, more monies. I'm over the moon. More monies with an S and a Z at the end. More monies. Yeah. I'm going nuts. I'm 1 out of 4. I'm 1 to 5. I'm laughing. Jason is still waiting for his correction past his 5-minute structure. He's like, oh my gosh. Or maybe, a minute. Yeah, Jason's still waiting for it. Yeah. Let's have a look. Now we've broken this level of structure over here. Have a look. Now let me get out of 15 seconds. Let me go back to my 1 minute. Let me go to my 5 minute. This is substantial structure that we broke here and most definitely here. So right now, definitely, if I was in that trade right now and I've broken big boy structure, think about our Russian doll. I haven't just broken this guy over here or this guy. I'm moving up to the big boys and I've punched big boys in the face. Yeah. So I'm definitely thinking to myself that there's a possibility now we're going to kick back. So I am going to be watching this smaller structure like a hawk. I do not want to give back any money because I know that thing can just spring back on me anytime. Let's have a look. Oh, more monies. I'm still in the trade. I've got no reason to get out of this trade because I haven't seen an indication, correction, continuation against me. I am on a smaller time frame though, because if I'm not on this tiny time frame, I won't be able to see anything. Do you get what I'm saying? I won't be able to see what the market is actually doing. I know it's going to retrace at some point, and I don't want to give away any more money back to the markets. I'm at a 1 to 7, laughing my head off. And I've identified liquidity has been taken here, and I'm thinking to myself, I want to close my trade. That's what I want to do more than anything. I want to close my trade. So I'm either just going to close it because I've got things to do, the kids screaming, I've got to go to work, I've got to do something, or I'm going to watch this like a hawk until structure breaks against me. Let me say something to you. If I'm doing this strategy, I will never be able to take the maximum out of the trade because I didn't close it down here. I'm going to only be able to close it when it kicks back on me, which means I am going to lose. Here's what it is. You're never going to take the maximum out of any trade. Hit play. Let's have a look. Let's see what's going on. Let's see what's going on. The market is currently trading within here and here, and it's kind of making a bit of sideways action now. I'm a bit concerned. I'm a bit concerned at the moment that we're doing a little bit of sideways action. Have a look at this line that I drew in of it coming down here, touching this point before this point, kind of breaking outside of a little bit. Let's have a look, see what happens. Oh, making more monies. And I'm still not out of this trade because it hasn't given me an indication, correction, and continuation against me. Where's my little thing right now? Where are we at? Let's have a look where we at. I think that must be like a 1 to 8 at the moment. All right. Now I'm showing you this because I'm just showing you the strategy. Like my tools are, no, I'm going to say limited, but I just have a handful of tools. This gun, this gun. And I'm waiting for what I need to see for me to squeeze and for me to stop squeezing. Have a look. And I'm not saying you should be here doing this on a 5-second time frame. I am not. For the YouTubers at home, I am not. I'm saying that this is the same principle on the 1 minute time frame, on the 5 minute time frame, on the hour time frame. The only reason I've dropped it down to here because I don't want to give away 5 minute worth of retracement, indication, correction, continuation. It's too much. I don't want to give that back to the market. Yeah, and I'm also trying to scrape the ball and take off as much as possible off this trade. If there was news coming out, guys, I would be out before the news. Let me say that one more time. If there was major news coming out, I'm taking my money because this situation might happen like this with news. Bang. I don't want that. I want it to happen slowly so I can take action. Let's have a look. And I'm going to finish up in a minute, guys. I just realized I had a 9:30 meeting. Yeah, let's go. Oh, at the moment, we haven't actually broken structure because this is the lowest point. But at the moment, the market is trading down within here and here. And I am now seeing my money is going backwards. Yeah. I want to make it a bit quicker because I can go weak. Have a look. I'm really concerned by this sideways action. It's not knowing what it's doing. Look over here now. We're pushing above this structure. Oh, I'm not happy about that. I'm ready to close out my trade. Correction against. Okay, okay. That's no problem. That's all right. I'm happy about that. Wait a minute. No, I'm concerned. I'm still in the trade, but I'm concerned. Why am I concerned? We are outside of the trend as well now. Now we're actually making some pushes outside of the trend. I'm telling you for free, if this candle comes back up above this level, I'm out, mate. I'm out. We're breaking outside of this trend and we're making this essentially higher highs and higher lows on a smaller time frame. We just haven't broken outside of this little range that we was trading with it. But we did do a little indication here, okay? This is the little indication, to be honest, where we go. Someone else might just stop themselves out here. Cool. But I have no problem with waiting and stopping myself ever so slightly higher. Let's have a look. I'm out. I'm out right here. I'm out. I don't care if afterwards this tanks, goes to hell. I'm out. I've taken my profits. Maybe I was all the way down here. I squeezed off some, so maybe I was at a 1 to 7, 1 to 8. Maybe I'm going to close it out at 1 to 6.5. I'm happy with that. Why am I happy with that? Let me make it a bit bigger, guys. I'm happy with that because the market started to go against me. And yeah, we saw a little liquidity grab first before it started doing what it's doing. Breaker structure, W, all the kind of things that we know, wick off, blah, 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 blah. But I'm cool. I took my money over here and the market is now kicking all the way back against me. Yeah. And at this point in time, when this market was coming up here, we're thinking to ourselves that it's coming just to close this imbalance, but we don't know. So you can't just hit the button as that imbalance is closed. You have to watch that market go into that area that you thought it was going to go into, and then you want to see an indication, a correction, and a continuation. And you want to make sure that that indication, correction, continuation is closing up the imbalances. Look, came up in here, push, let's see what it does. Didn't come and correct down here, did it? It didn't come and continue down here, did it? It came up here, came a little bit into this imbalance, pretending it was coming down here, and then we're over here. Well, that's void then. That little indication of it breaking a little bit of structure here is void. It's pushing all the way up here. Now it's closed these imbalances, and now we're thinking the same thing again. Okay, we've closed these imbalances now. I'm expecting to see it, structurally, this is structure here on a 5-minute time frame. The kind of last low before this highest point, all right? Obviously, if we dropped our time frame down to the 1 minute, even that, then that is the last low before this highest point. Yeah, and the market is trading within that, doing the hokey cokey. Let me speed this up, guys. So I want to finish up now. All right. Look, hokey cokey. Thinking about it. Thinking about it. Oh, thinking about it. Even that little push down here didn't break this structure. So if I was in here, I'm still thinking to myself like, getting broken out of here. Have a look. You see how I'm saying to you, we can read this book. It's a book. We have to read it and come up with a story. Because I'll be sitting there thinking to myself, I need to see what this market's going to do outside of this range. And at the moment, it's just doing the hokey cokey. Yeah? Could I trade this range? Yes, I could trade this range with the exact same strategy, trading from the sells from the top, buys from the bottom, waiting for indication, correction, continuation. But is it worth it? No. Such a small, I'm on 1 minute time frame trying to work out what it's going to do. Yeah. Let's just quickly play that forward now on a larger time frame. I don't know how long we're going to be here for. Oh, did you see the indication? Indication? Breaking that structure, indication. Correction, closing the imbalance in this big green candle here. Look, big imbalance that was in here. Closed it, nam, 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 and then came and closed back above it here. On a 5 minute time frame, we're on a 10 minute at the moment. You'll see a nice little candle closure up here. And then the market's decided to push up a piece. Yeah. So for all purposes right now, obviously I've got to look at our bigger range. This market is doing whatever it's doing. All right. And so on the larger time frame structure that we drew in here, we have to wait. If we're thinking that we want to get in for a sell, we're going to wait for a break of structure bearish. If we're thinking this market's going to continue going bullish, which we can see here, this is an overall bullish market. All right. It's overall bullish market like so. Like so. We've seen this liquidity sitting above these levels here. Nam, 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 it ate this liquidity. There's a possibility that this market might want to come back down into these levels on a daily time frame. Obviously, these are not drawn great. On a daily time frame, you can draw some lines. You can draw some lines like so. On a 4 hour time frame, this market is currently trading within, which I'm ultimately putting back all my analysis that I had there before. I'm just putting it back. And I have no issues with deleting my analysis because ultimately it should be the same when I put it back. It shouldn't change. It should be the same. And that's what I was saying to you. This market is ultimately kind of in the middle. We can drop down to our hour time frames. It's ultimately in the middle, trading sideways. Doing a little hoke, doing a little hokey cokey inside of another hokey cokey inside of another hokey cokey. All right. So like I said to you, I'd prefer that I can see some stuff when the market breaks out these bigger ranges. Same with the GBP USD, etc. etc. Guys, I hope you learned something. I ran on a little bit later on today because I started a bit late this morning. Apologies. I hope we learned something. I hope we're going to go and practice. We're going to go and look at and just think about learning this language. You have to come up with a story. If you don't have a story, then you don't know what's going on. So therefore, you're victim to you heard on, Twitter that GBP USD is a sell. Like, that's just not good enough, guys. I'm not going to lie to you. It's just not good enough. All right. But good morning. God bless. I am going to, I'm going to play something quickly. It's only 18 minutes. It's something motivational for us to watch. And it's basically, it says 2000 okay, that's not good. Yeah, it says 2018 is the year I will achieve my dreams. I'm a bit past 2018, but let's watch it anyway. All right. But guys, good morning. God bless. Thank you for being here. I hope you've learned something. I hope you're going to put it into practice. Back test it. Back test what I say. Don't take my